Welcome, everybody. Thank you so much for joining us. We had a really good response for this, and I knew we would because tax immigration is such a hot topic for South Africans at the moment. So Richelle's going to do her thing. I've decided to change it because we've got so many people interested in tax immigration that I thought if you have got money transfer questions, I'm more than happy to answer your questions, not a problem. But I think most of you are here for the tax immigration anyway. It will be recorded, it is recorded, so it will be available for whoever wants it.
Hello everybody and welcome to the presentation tonight. We are so glad that you joined us. We will be looking at tax immigration this evening. If you do have any questions, please write them down or keep them in mind. We will be having a live Q&A session at the end of the presentation. If you want to speak about specifics and you don't want to share your information on this platform, you can send us an email and we will get back to you. The email address will be shared at the end of the session. Okay, so let's get started. Just a quick introduction as to who I am. I started my career in the financial industry in 2016, focusing mainly on accounting and taxation. I completed my BCom in financial planning in 2019, and then I decided to move into the treasury management and foreign exchange market. I've been working in that sector since, and I actually started a tax division within our firm back in 2021 when the financial immigration process was officially introduced. Fast forward to 2025, I transitioned fully into tax, focusing on simplifying the financial immigration process and working with clients closely to personalize the process for them. Okay, just quickly looking at the agenda points for tonight. I'm just going to read through these bullet points very quickly so that we can get on to the presentation. We will look at tax immigration, briefly look at the expat tax exemption, why your tax residency status is important, what happens when you cease to be a resident, how do you declare non-residency, when will a declaration be declined, who must make the declaration and when, and then we will go on to our Q&A session. Okay, so the first point that we're looking at is tax immigration, and I want to mention the terms that you will deal with when you look at the tax immigration process. And these terms all essentially mean the same thing. So first of all, cessation of tax residency or tax residency status change. Some people also refer to it as the TRSC process. And all three terms mean the same thing. They mean that you're going to change your tax status from resident to non-resident in the books of SARS. Just a little bit of history. The concept of tax immigration has actually been around for a really long time. South Africa has been on a residency-based tax system since 2001. But the tax immigration process only officially replaced the financial immigration in 2021. Okay, so this topic, I'm not going to talk about it too much, but I do want you guys to just have an overview of what it means, because it is important to understand the difference between tax immigration and having an exemption on your income earned abroad. So I'm just going to read through this real quick, and then we're going to look at the differences between the two. So the expat tax exemption used to have no limit. The rumors of the change for the 1.25 million only started around 2017. SARS received less than 5,000 foreign income declarations per annum, and these numbers weren't adding up because financial immigrations through SARB were way higher. It didn't align. They confirmed that this gap was as a result of non-compliance, either through the SARS filing requirements or the SARB process. So this is where the shift happened, where they decided it must be either or. They can't use both processes because there's a misconception. So the process through the Reserve Bank was stopped. It became a SARS process, and SARS implemented a capped exemption of 1.25 million on employment income that came into effect on 1 March 2020. So what is the expat tax exemption? This is the Section 10102 exemption that you can apply to your foreign income if you qualify for the 18360-day rule. Now, there's a common misinterpretation of this rule, and most people think that they are automatically exempt from the 1.25 million, and that is not the case. So if you go and look closely at the rule, it speaks about 183 days working abroad, specifically focusing on the working part, and 60 of those days must be consecutive. Okay, there's actually a formula that you must use. I'm not going to go into much detail into this, but it is on the screen for you guys. There's a formula that you must use to proportionate the income that will be exempt, and that is limited to 1.25 million. So even if you earn less than 1.25 million, there is a possibility that you will still be taxed on that income. Okay, so the important part, what is the difference between tax immigration and the expat tax exemption? Okay, so tax immigration is changing the way you are taxed in South Africa across the board. So all tax types, mainly focusing on foreign income because that's the most important one for most people. So you will have no tax on your foreign income. The expat tax exemption, on the other hand, a portion of your foreign income may be exempt. So you must qualify, may be exempt from tax in South Africa, and that is limited to 1.25 million. Okay, so why is your tax residency status important? The most important, and we touched on this now already, is the way you are taxed. So, like I said, most of us only look at employment income because that's where most people are affected. But it's also important to consider other factors like capital gains tax on your disposal of worldwide assets if you are a resident. So, if you have a property offshore and you are still a resident in South Africa, you will be liable to pay capital gains tax in South Africa on that foreign property. Same applies for donations tax. You're also paying tax in South Africa for donations made abroad, and estate duty. So if you are still a resident, your worldwide assets will be included in your estate, and you will pay estate duty on your worldwide assets. If you are a non-resident, on the other hand, you will only pay estate duty on your South African-based assets. The second point that we consider as important is that you can gain early access to your retirement policies if you qualify, meaning you are non-resident for more than 3 consecutive years. And then last but not least, the administrative burden of submitting your tax returns. It is quite a burden to submit a foreign income tax return, and it's very complex. So if you need to do that, you should probably get in contact with somebody to help you with that. Okay, so what happens when you cease to be a tax resident? Firstly, you will only be taxed on your SA sourced income. Once you have ceased your tax residency, you will no longer be taxed on your worldwide income. However, and very important to note, is that you will still be taxed on your SA sourced income. So if you have an income from a South African source, you must still submit your income tax return to SARS annually, declaring your SA sourced income. You will, however, not be obligated to declare any of your foreign income to SARS. The second thing, and I think the thing that most people worry about, is the exit tax or the exit charge. And that is a deemed capital gains tax that SARS imposes on the deemed disposal of your worldwide assets. So they say that there's a deemed disposal on an asset at market value at the day before you leave South Africa, and you will be taxed on a capital gains tax on the disposal, deemed disposal of those assets. Okay, looking at a few examples of exit tax, and this list is not exhaustive. This is just the assets that we commonly see when we process applications. I think let's start with the excluded because this is the one that people often confuse. So South African fixed property is excluded from exit tax. You don't have to pay the capital gains on that property when you leave the country or when you place your immigration on file with SARS, because you will, in any case, pay that capital gains tax when you sell the property in South Africa, no matter your residency status. So that is exempt. The others are retirement funds, personal use assets, and cash. Then the included assets in the exit tax calculation is foreign fixed property, shares, unit trusts, and similar cash investments, and then also crypto assets. So how do we declare non-residency to SARS? There is a declaration that needs to be submitted, and you must convince SARS in a motivational letter and provide them with supporting documents to say that you are now non-resident. SARS will take all the facts into consideration, and they have the opportunity to accept or reject your application. They can come back to you, they can ask for more information, or ask you to motivate some of the points in your original motivational letter. The most important document that we must provide SARS with is the tax residency certificate, and we've seen a lot of scrutiny with this specific requirement, and SARS is really going after taxpayers to provide a tax residency certificate from the Foreign Revenue Authority before approving the applications. In the UK, that would obviously be the HMRC. Okay, when will a declaration be declined? If SARS asks for material related to your motivational letter and you can't provide them with the supporting documents for that, they may reject your application. If you do not meet the criteria for ceasing to be a tax resident, they can also reject your application. There are 3 qualifying criteria when it comes to putting your immigration on file with SARS. The first being the ordinarily resident, physical presence, and then you can also claim it under the DTA or the double taxation agreement. Okay, so who must make the declaration and when? SARS should be informed of all changes in your registered particulars, including the tax residency status change, within 21 days. However, if you did tax immigrate and you didn't notify SARS, we are able to backdate that application, given we can provide SARS with the necessary documents to prove that you left South Africa on a certain date. And they will typically look at your passport stamps to prove the backdated cessation of residency. The individual taxpayer can submit an application themselves, or they can appoint an authorized representative to submit the application on their behalf. Okay, we can move over to the Q&A session now. I hope you have a lot of questions. I love answering them. I'm going to switch over to the next slide just so you can have the email address. If you have a specific question or situation-specific question, then you can send us an email and we will get back to you on that.
Okay, so if you have any questions, you can put your hand up or you can type it to us, or like Richelle says, email us at admin@wbforex.com. This webinar is being recorded, so if there's somebody that might be struggling to get on, I see there's one guy struggling to get on, we will make it available for people to have a look at later. Okay, fire away.
Hi, Richelle, can you hear me? I can't put my hand up.
Yes,
Yeah,
It's
I
I
can
can't
hear you.
see.
can you hear? It's Avis Coxon speaking, but I'm her husband Bailey.
Yes.
A
I
quick
spoke to you this.
question. We've
Yeah.
been we moved over to the UK 4 years ago just to come for a while, and we will be going back to South Africa probably within the next 10 years or so. Um, so if I do become a non-resident or a non-taxpayer and we go back to South Africa, what happens? What happens then?
Well, you will need to notify SARS of the change in status again. So when you come back to South Africa, you go basically through the same process, but in reverse. So you will notify SARS within 21 days that you are back in South Africa and you want to change your residency status back to resident so that they can tax you accordingly.
And if you say stay 6 months in the UK and 6 months in South Africa
It
within a year period, does that
it
change things?
Yes, it depends on where you see your main home to be. And it can be that you can have two. So if you have a permanent establishment in South Africa and you have furniture there and you have a car there, and you are settled in South Africa, but you are also settled in the UK, then it's like a dual tax residency, and you will have to look at the DTA on who has taxing rights on what type of income. And that will be DTA specific. So if it's easy to say that you don't have a permanent establishment in South Africa, you can remain resident in the UK for tax purposes, but you will have to assess your situation at that point in time and look at the very specifics as to where your permanent establishment is and go according to that.
Is there, if we stay in the UK as residents, is there a time limit that you have to be, if we do go to South Africa, is there a time limit of how long you can stay there for
No,
being a
there's no
non-resident?
No, there's no time limit on how long you can stay, but SARS can question your intent. And if they question your intent and you are in the country for way too long, or you do in that time get a permanent establishment and you move your furniture here and you come back on a regular basis, they look at the intent of your application or non-application, and then they can say you are deemed a resident because of the situation.
Okay. And then, sorry, well, I'm hogging all the questions. I'm hogging, but maybe it'll help other people. So if we stay in the UK and I've got a UK pension, and if I take that pension, this money transfer, take that pension back to South Africa, does that affect SARS? Will they tax that
Um,
money that goes into my South African bank account?
that depends also on your residency status. So if you are non-resident, SARS will look at the source of the funds. So there's no tax on remittances, but there is obviously tax on the source. So if you are a non-resident and this is a pension income, then SARS won't tax that pension income
Okay.
because you earned it abroad. Yeah,
Okay. Brilliant. Thank you so much.
it's a pleasure.
Thank you. We've got a question in the chat from Mark W. Does the recent court ruling between Standard Bank and SARB declaring crypto is not an asset or cash have any effect on the way SARS views it for exit tax purposes?
I'm going to have to look into that ruling because there's obviously a court case there. So there might be specifics that I don't have at the moment. But Mark, if you can send us an email, we can speak about it once I've just read through the entire ruling. I don't want to advise and then, miss some details on that.
Okay, and then another person is saying, I landed in the UK on the 10th of March. Do I have to do the non-tax resident?
You don't have to. And the thing is, if you go through the tax non-residency process, you are taking away SARS's right to tax you. So they don't necessarily want you to go through this, but if you if you do go through it, you will protect your foreign income. If you don't go through it, you must declare your foreign income to SARS. So it's just a matter of going through what must happen if you don't and what must happen if you do. And, complying with the HMRC and SARS going forward if you don't. I hope that answers your question.
Okay. Ashley, you've got your hand up. You can go ahead.
Hi there. So my husband, he's with me at the moment. He's done his financial immigration from South Africa with his pension fund. So the money at the moment is still sitting in South Africa in a bank account. We are concerned about because we've just read a few bits about it that he's going to bring over the money here and he's going to be taxed again from a UK perspective. He is a tax resident now, obviously in the UK. We've been here now for 7 years. It took 3 years for his financial immigration to come through. And it has eventually come through now, but the money's still sitting in South Africa, and we haven't moved it yet here because we are not too sure with regards to the implications from a tax perspective this side as well.
Okay, Adele, can you comment on the tax at the HMRC?
I don't know anything about it because, I mean, as you know, there's strict rules about giving advice about tax
Yeah, so
advice. So it is difficult. I know that Peter does know a little bit about it, but he's not available tonight. It might be better if you email me at admin@wbforex.com and I can get Peter to answer that question for you. But it's such a minefield, and I really don't want to give any tax advice in the UK because I'm not a tax expert.
Of
yeah, so
course.
I'm
Thank,
also not
thank you.
registered in the UK, but I can comment on the South African side. So maybe just send Adela an email to find out exactly how it works with the HMRC. But from a South African point of view, there is a directive that you can apply for to waiver the tax that was taxed in South Africa on that policy. But you need to be able to provide SARS with proof that you were taxed in the UK as well. So there is a route to follow in South Africa to not pay double tax on that income. But in terms of the tax with the HMRC, I'm not too certain. You will have to check with a tax practitioner in the UK.
Okay, thanks very much.
But if you need help with transferring your money, Sharon, that we can help you with that because we do give the a very, very good exchange rate to transfer your funds out of South Africa when you're ready to do so. If you want more information, you're welcome to email me either at admin@wbforex.com or adele@wbforex.com. There's a question here from Laurie M. If I am a non-tax resident in South Africa, can I withdraw my living annuity in full?
Unfortunately not. So if your policy is still a retirement annuity and you haven't taken that option to convert it to a living annuity, you are able to withdraw the entire policy. But as soon as you take that option to convert to a living annuity, that policy is basically stuck in South Africa. You can remit the monthly payments that you get from the living annuity, but you can only withdraw that policy in full once it's below the value of 125,000 Rand.
Okay, thank you. Kathy says, is it possible to delay becoming a non-tax resident if you want to use your 1 million Rand annual allowance before it gets stopped once you become a non-tax resident?
This is a tricky one because SARS is not going to know that you are deliberately delaying the process. And the Reserve Bank is also not going to know necessarily that you are deliberately delaying the process. So technically, you can. You're not supposed to. You have 12 months after you cease your residency to use your SDA. So I would suggest use your SDA within that 12 months. And then after that 12 months, rather do the non-residency and do it through the non-resident account. So you can still do Forex through the non-resident account, and it's not capped to 1 million rand per annum. The only difference is that you need to apply for a tax clearance if you want to do Forex through that account in certain cases. So depending on the income type that you will be receiving, you might need to apply for a tax clearance to get those funds out of the country.
Okay. Liz, over, you can go ahead.
Hi, thank you. I've got a couple of questions. I'm not sure whether you'll be able to answer them. So we moved to the UK from South Africa 2 years ago, and we were under the impression my husband's business, he earns money there, and we were just transferring the money using the funds that we could, because we were under the impression he could pay tax in South Africa, and if we get something going on this side, I'll pay the tax here as I'm the one with the British passport. But we realized once we investigated that that's not how it goes, and we're liable to pay tax here because he's living here, he's sourcing his income from here, so really he should be taxed here. So in the process, we've applied to have our tax residency seized, but his income will continue to come from South Africa. And for the whole of the last financial year, 24 to 25, he paid tax in South Africa. So SARS have his tax, but our accountant says, no, we must now get a UK tax practitioner to do our financials for that year. Will we be able to get those funds back from SARS and pay that tax here?
No, because SARS has a residency-based tax system, and what that means also when you declare non-residency, a non-resident is still taxed in South Africa. You are just taxed in a different manner. So if you still receive South African sourced income, depending on the source, say salaries, or I'm assuming you declare the salaries, and you have an IRP5, you are still liable for pay as you earn on that income, even though you are classified as a non-resident, because the income is from a South African source. So there might be a way, and again, you can maybe confirm this with a UK tax practitioner. There might be a way to claim tax credits in the UK for the tax already paid in South Africa. But from a South African point of view, you will still be paying the pay as you earn.
Okay, so that money has gone, but hopefully we can get it credited when the tax
there
practitioner
should
does
be a way.
the UK tax return. Okay.
Yes.
All right, great. And then is there a possibility that his salary, it's his business, he pays himself a salary and other people, that he can pay his salary from South Africa into a UK account? Because up until now, it was just going into our bank account and using our discretionary allowance to move it over.
The thing is, if you do that, they are probably going to use a commercial bank, and you are going to lose out on the exchange rate, because commercial banks charge up to 60 cents per conversion, where somebody like WB Forex can give you much better rates. So you're going to have more bang for your buck, if you can say it like that. Not doing it like that, and rather using your single discretionary, or if you're a resident, you have a single discretionary. If you're non-resident, you don't. So just keep that in mind. If it's already a non-resident, then you might have to apply for a tax clearance to get those funds out.
Okay, all right. So did I hear you say that you can continue for 12 months after you've ceased residency.
Yes,
You can
12
still
months.
use it, okay. But you do transferring of funds.
Yes, we
Yes.
do.
Okay. All right. Well, then I'll email you separately about that.
Yeah.
Because I'd also heard you can apply for a 10 million a year, I mean, to send out.
Yeah, that's also linked to your residency status. So if you are a resident, you get a foreign investment allowance, and that's the 10 million that you typically refer to. But if you are a non-resident, that doesn't apply to you. So once again, you'll go through the same process of getting a tax clearance, but you don't have limits. The 1 million and the 10 million limit doesn't apply.
Okay. All right.
Yeah.
So the only way we can do that is get tax clearance every month on
Yes.
funds that need to be sent over.
Yeah, so if it's just salary, you can get exchange control approval, and they will allow the salary to be paid out monthly, given the fact that you can give them supporting documents for that. But if you have a lump sum that you need to do now, you'll have to get a tax clearance for the lump sum, and then for the salary payments going forward, you can provide them the documentation, given you get prior approval from exchange control. And that is also something that we can assist you with to get that exchange control approval in place.
For a salary to be paid into.
Yes.
Oh, okay. All right. Thank you. Well, I'll email you about that. Thank you very much.
Okay. It's a pleasure.
Thank you, Liz. Yeah, just to pick up on two things. Yeah, with the money transfers, we can help you to transfer your funds out of South Africa. The important bit, which I must really stress on, because I see this more and more every day with my clients, is people get very confused with this AIT and the single discretionary allowance. So, and changing their status to non-resident. So if you change your status to a non-resident with SARS, then the SDA, the 1 million rand single discretionary allowance, falls away. So you're not then you don't qualify to have what your 1 million rand every 1st of January that you can then transfer. You will have to then have an AIT in order to transfer your money out, and that is it does take long. At the moment, AITs take up to 21 working days to get, and they ask you a lot of questions. You have to submit your bank statement to show that the funds are in your bank account. They, like, let's say you're applying for 5 million rand AIT, then the SARS need to see that you've got the 5 million rand in your bank account. The 10 million rand AIT it's not a blanket amount. It is a specific amount. So you have to apply for the 5 million that you want to transfer out. And that 5 million doesn't have to go straight away. You don't have to transfer that immediately as soon as you get the AIT. You can transfer it over the year that the AIT is valid for, in drips and drabs. So you can do 1 million now and another 2 million in a month from now. But the AIT has a lifespan of 1 year from the date of issue.
Okay.
So from the date that that's issued, you've got 1 year to transfer that 5 million rand out of South Africa, but it can only be up to the amount that you applied for. So let's say the 5 million rand.
Okay.
So we can help people to transfer their money. Not a problem. The bank transfer fee is 250 rand, which is irrespective of the amount that you transfer. So whether you transfer 5 million, whether you transfer 10 million or 1 million, it's 250 rand every time. We do work really hard to give our clients the best exchange rate that we can. We do offer exchange rates better than most commercial SA commercial banks do. If anybody would like money transfer advice or help, or want us to set up an account for them, please email me. You can email me directly, adele@wbforex.com, or you can email admin@wbforex.com. But please if you change your non-tax residence status with SARS to non-tax resident, you do not qualify for the 1 million rand SDA. and where a resident would get that every year, and they can, if they have more money that they want to transfer out, they can also apply for the AIT for that. But yeah, I just see it lots more these days of people wanting to not quite understanding about the non-resident and the resident one. So I thought I'd just quickly give you a speech about it.
Yes, thank you. I misunderstood that because I thought if you had applied for non-residence tax status, then you couldn't have the AIT, where I'd been told you can use the AIT. You can't.
You can.
Oh, you can. Yes.
Yes.
Okay.
Yeah.
Right. But you have to have the funds there for whatever it is you're applying for your AIT. They've got to see it.
Yeah.
It can't be a salary that you only see every month. No.
Yeah. So the AIT, maybe I should just elaborate quickly just on that. So there's two types of AITs you can do an application for. There's a resident AIT and there's a non-resident AIT.
Okay.
The process is fairly the same, but the PIN that gets issued clearly states non-resident or resident. If it states resident, that will give you access to that 10 million allowance that you have.
Okay.
If it states non-resident, it's just purely capped to the application amount. And there's no limit to that. If you go above 10 million, there's a sub application that you need to do in either case.
Okay.
Okay.
That's what you do too.
Yeah.
Okay. Okay. But a salary every month isn't going to, it's better to come to you and get exchange control approval to pay a salary.
Yes.
Okay.
Monthly.
And does that
yes.
fall into, what would that fall under as a resident but not a tax resident? Nothing.
No. So in order
Okay.
to do that, you will need the non-resident account specifically.
Okay.
And we can then apply to exchange control with all the documentation that you have to prove that this is a non-resident earning a salary. So it's an income payment.
Okay. And sorry, quickly on that point, do we have to now convert bank accounts we have in South Africa to non-resident status?
Yes, that's
Yes.
very important. So as soon as you place your non-residency on record with SARS, you must inform your banking partner that you have changed your tax status, because that does affect your account directly, because non-residents are bound to exchange control for each transaction that they do, where residents have more room to, transfer up to the 1 million. You can transfer without informing SARS. You can basically not do what you want, but you know what I mean. There's a 1 million cap for you to use as you please, where non-residents don't have that.
Okay. All right. Thank you. Thank you very much, both of you.
Just on that point, when you do change your tax residency, your residency tax status with your bank account, because every bank seems to have a different policy about it, and every bank seems to have a different rule about it. They will tell you that you have to financially immigrate if you change your tax status. They'll tell you all sorts of things. Please, we don't mind answering questions, even if you're not a client with us. We don't mind answering questions. First, rather come and check with either myself or with Richelle or with Peter. We have a huge team of people that work behind us in the background that can give us the right information to be able to give you the right answers. So please don't just take the bank, if the bank says, no, but you have to do this and you have to fill in all sorts of forms and blah, 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 whatever. First, check with us. We really don't mind, even if you're not a client. Just come and check with us. Say, this is what the bank said to me that I must do. Is this right? Blah, blah, blah. Because the banks, some of the banks they'll make you run in circles. And it's really, when we help you to go through this process, we make it so much easier because we've done all of the legwork, we've done all of the hard bits already, and we just make it easier for you. Even if you're not a client, really, honestly, I would much rather you guys have the right information and get your money than get the wrong information and you struggle for years to get your money. I've had clients that has happened to.
Thank you.
No worries. Ashley messaged us. She couldn't unmute her sound. Is there a penalty if you don't inform SARS that you have left RSA within the 21 days, or is it dependent on when you start meeting the 1.25 million rand threshold?
No, so there's no penalty if you don't inform them within 21 days. There is a penalty though if you should have paid exit tax on that date and you didn't inform them of the exit tax. So how it works is if you inform SARS that you have left, you can inform them the day after. You don't have to wait to meet the 1.25 million threshold. The only requirement is you need to be out of the country. So they need to see that your intent is not to come back, and you motivate that in your motivational letter. If you do backdate the process, say 5 years, and you should have paid exit tax 5 years ago and you didn't notify SARS, and say there was a tax return submitted. For that year, there's no exit tax declared in that specific financial year that you emigrated. You must do a voluntary disclosure. So that will basically ask SARS not to penalize you. So you're going back to SARS saying, I'm voluntarily giving you this information. I should have paid the exit tax. I'm backdating this process. I wasn't aware at the time. Here's the calculation. You're going to pay it in full. And you basically ask them not to penalize you. If you don't go that route and you just submit and you don't ask them for a voluntary disclosure, or you don't give them the voluntary disclosure, they can penalize you up to 200% of the exit tax that you should have paid on that date. So it's very important, if you do backdate and there is exit tax payable, to go through the voluntary disclosure program before you submit that exit tax to SARS.
Adele, I have a quick question for you. If you're sending money back to South Africa from the UK, and that just goes into a normal commercial bank account, are there any implications for SARS with regard to that? Is there a limit on how much you can send back? Do they check your bank balance? What are the implications if you're sending money back to South Africa for whatever reason?
Okay, so I don't deal a lot with transferring money back to South Africa. What I'm going to do is I do have one of my ladies that works for us, Khosa. She is in the room. Khosa, are you able to answer this question? Because Khosa deals with the transfers. She's one of our traders. So she'll be able to answer that question for me. I am putting her on the spot now. I'm really sorry, Khosa. Are you able to answer this question for us, Khosa?
I can email it to you later, and then she can give me the response.
Fine. Khosa deals with this, so she'll be able. I don't know if she can hear me. Maybe she's left the room. But yeah, we do transfers to South Africa. But what the costs involve, because I just do the transfers out of South Africa. So Khosa is the one that deals with the transfers out and into South Africa. But I don't think that the cost for that is very high. I think the last time I inquired about it was like 350 Rand to transfer the funds back into your Capitec account. Like if you open an account with us, then it's 350 Rand with Capitec, but I'm not sure what your bank, like if you transfer it to ABSA or FNB or one of those banks, I'm not sure what they will charge you. You will have to check with them. But yeah, so with regards to, did you say you wanted to know what the tax implications would be with SARS?
Yeah, we're just sending, a couple of £100 back every couple of weeks. So it doesn't amount to a huge amount, but over a year's period, it might just be sufficient for SARS to say, oh, what's going on here? Why is there money coming into the country? Or do they want the money to come into the country?
Yeah, the tax on that will depend on your residency status. So if you are a resident, you are taxed on your worldwide income. So then SARS is definitely going to want to know where those funds are coming from and if they were declared in your income tax return. If you are a non-resident, and those funds come into a non-resident account, SARS is not going to ask questions about it because they don't have a taxing right on your foreign earned income.
Brilliant. That
Yeah.
answers my question perfectly. Thanks.
Okay.
Thank you very much.
Perfect.
Thanks, Ivan. I just quickly want to reiterate or just explain again about the single discretionary allowance. So the single discretionary allowance is for South African citizens from the age of 18. You are allowed, as a South African citizen, you are allowed to transfer 1 million rand per year out of the country, out of South Africa, without the need of a tax clearance or what we now call an AIT. So every 1st of January, a South African citizen or resident is allowed to transfer 1 million rand out of the country. So what a lot of people do is, if they have a lot more than their 1 million rand that they want to transfer, is when they still have a little bit of income, from business or from a salary that they still earn in South Africa, they use the 1 million rand SDA for that, and the big bulk sum of money that they want to transfer out, like the 5 million or 3 million or 10 million, they use the AIT for that. So you can use your SDA for the smaller amounts. And I always advise people, if you're going to transfer money out, transfer the big amount out using an AIT. And then because sometimes we forget that, maybe you've got an investment somewhere or you get inheritance somewhere, you've got that 1 million rand SDA that you can use. If you use up your 1 million rand SDA for the year and you then have more money that you want to transfer out, you're going to have to get an AIT for that. Let me just see if there's somebody else. If I relocate my company and my pension is transferred, are there any tax implications? Transferred from SA to UK, the company has offices in the UK. That's from Tepo.
So that will depend on how the transaction takes place. So are they selling, withdrawing the pension fund in South Africa and transferring it abroad and reinvesting? Is it a investment that is held offshore? We're gonna need a few more details to advise on that. Maybe you can send us an email and we can look into the specifics of the transaction, and then we can get back to you.
Brilliant, thanks. I don't know how to pronounce the name. Oppo, you can go ahead. Sorry, I know you've had your hand up for a while. Sorry. Is asking, if I am a non-tax resident in SA with a living annuity, can my monthly income be paid directly to my UK bank account from my investment company?
Living annuity, most investment companies don't do offshore payments, but that will depend specifically on the company that your investment is with. I would, however, not suggest doing that. As I mentioned earlier, they use commercial banks and the exchange rates are not at all favorable. So it would be wise to rather open an account, say with Best Forex or whoever, can offer you a better exchange rate, and then we can assist you to transfer the living annuity abroad using the correct channels, and then obviously you gain by having a favorable exchange rate.
Thank you. Oppo, are you ready? Do you want to ask a question? You might have to unmute yourself. Okay, I'll try him again later. Kathy wants to know, Richelle, an AIT is valid for 1 year. Once you have used the limit and the year has passed, can you apply for another AIT?
Yes, you can. So the AIT is valid for 1 year, but your foreign investment allowance is valid for a calendar year. So just keep that in mind. It can, overlap, but you must stick to your foreign investment allowance of 10 million per calendar year, and then you can use your AIT for the 1 year that the AIT is valid. So it can be that your AIT falls over 2 calendar years, but you can still reapply once the AIT has expired.
Thank you. Opo, if you want to send us a message with your question, we might be able to answer it there. I'm not sure if you've got any issues with your muting or your voice. We'd love to hear your question. So I don't know if there's anything else, Richelle, that you wanted to discuss or maybe touch on.
I don't have anything else from my side. I think we answered most of everybody's questions, if not all. But please, if you do have any questions, please send us a mail. Like Adele said, we don't mind answering your questions. And we get back to you as soon as we can.
I think,
Richelle?
yeah, there we
Yes.
Richelle?
Yes.
Tracy speaking. I just wanted to know, okay, I sent the message, I landed here on the 10th of March. It just bugs me all the time. Okay, I haven't been working, but I'm getting a pension fund every month into my South African bank account. Do I have to do a non-residence, or must I just leave myself as I am? I finished working at the end of February this year for the South African company. So I will be doing my RP5 and all that this year and for the next few years, isn't it?
Yeah, so you don't have to, you never have to declare non-residency. It can only be in your favor. So if you are just receiving a salary or a pension payout from South Africa, and that's your only source of income, I would say you can delay the process until your circumstances change. And if your circumstances change, always go back to the drawing board and review, is this still the best option for you to stay a resident, taking into consideration the other tax types as well. So we are mostly talking about employment income and pension income. But do keep in mind that capital gains tax also applies. So if you sell an asset offshore, you must declare your capital gain to SARS as well. If you make a donation, that donation tax needs to be declared to SARS. If you pass on and there's a state duty, the estate duty will apply to your worldwide assets versus just to your South African assets. So yes, the employment income and the pension income is important, and that's the most important factor that we always consider. But just keep in mind that there are other tax types to consider as well. So long term, I would say if you don't plan on coming back to South Africa ever, go through the process, place your non-residency on file, and you know that you are sorted. But yeah, take a few months, review your situation often, and if you do see a change in circumstances, go back to the drawing board.
All right. Thank you so much.
Thank you. Kathy, sorry, not Kathy, Dale. Hi, how does it work with SDA and family members, i.e. 1 million rand for adult and 250 per child, 250,000 rand per child? So yes, the 1 million rand is per adult from the age of 18. For children, I can't remember, Richelle, I think I've only ever done one for a child. Is it 200 or 250 now?
Adele, I think it is 250 per child, but I speak under correction because I must actually come back to the client on this one.
I know.
But yeah, I know it is a travel allowance, so it's not like an SDA, and there are additional supporting documents that you must give per child. I know that includes their birth certificate and the flight tickets, and you can only do it within a certain period close to your flight. So it's not the same as a single discretionary allowance. It's more a travel allowance.
Yeah, and just bear in mind that the 250,000 Rand per child can only apply when the child is still in South Africa. So it's not, it doesn't apply once they've left. So
Yes.
the documentation that Richelle's mentioning has to be submitted within a 90-day period before the child leaves the country or flies out from the country. So, and the other point to make is the 250,000 Rand is linked onto an adult's SDA. So basically it's 1.25 250, so that you 1,250,000 that the adult then gets to transfer. The 250 is the child, but it's linked to the adult. But like I said, and Richelle said, there's documentation that you have to submit with that, and it has to be done while the child is still in South Africa. It does not apply, and it cannot be applied once that child has left the borders of South Africa. So just keep that in mind. But we don't do a lot of them, so don't stress too much. Many thanks for all your input, because we have cleared up quite a few misconceptions. Thank you very much, Avis. If there's no more questions, I think we'll wrap it up. But please feel free to email us anytime. We really do just want to make sure that people do have the right information rather than the wrong information. I really, honestly, I can't tell you the amount of times that, and I think Richelle can back me up on this because she's been in this industry a very long time, of people getting the wrong information, and then they lose a lot of money or they can't access their money. If I can give you a tip, if you're still in South Africa and you are moving over to the UK or any other country for that matter, please, 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 I can't stress this more. When you go to your bank, please make sure that your OTP is on email, because your mobile number or cell number is going to change once you are in the UK or in Australia or in America or whatever, and you won't have access to that, and you won't be able to get your OTP, and you won't be able to get your funds because you won't be able to get onto online banking, and the banks will make it difficult for you to get onto your online banking. So please do go into the bank, make sure that your OTP, and test it before you leave the country. Make sure that you get your OTPs to have access to your online banking from the bank before you leave the country. Please, I've got so many clients that I wish I could have helped them before they did it. They've got money stuck in South Africa in their bank accounts. They can't get to it. They don't have their mobile numbers for South Africa. They can't get their OTPs. It's a mess. Please send it to your, get them to send it to your email address. But yeah, I think OTP, very important. I just did this with Standard Bank, 3 days. So yeah, thank you for that, Mark. Yes, like I said, and Richelle said, we are more than happy to answer people's questions on email, even if you're not a client with us. But basically, just please check with us. Don't check with the bank, check with us. We have the right information. Anything to do with SARS, Richelle will help you. And we are here to rather give you the right information and help you get your money. Because I've immigrated, I've been here 22 years now. And I know how difficult it can be to transfer your money. So, yeah, we've made it easy for you. But thank you very much, everybody, for joining us. We will do another one, probably in about a month or so. Maybe if you wanted more specific subjects that you want us to talk about in the tax immigration process or anything else to do with money, let us know. We welcome any ideas. We want to give everybody the right information, and this is one way that we can do it. But thank you very much, everybody, for joining us, and have a good evening.
Thank you, everybody.
Thank you. Bye-bye.
Thanks very much. Bye.
Thanks, Liz. Bye-bye.
Bye.